Well, it's going to be some of the same and a lot different. And I think what we're doing right now, and when you go back to March 17th, when we closed our New York City flagship, the team and I immediately broke this into 3 chapters, which is first the now and the present, and then what we're calling re-entry, which is where we are today, okay? And then moving into the next normal. Not the new normal, just the next normal, because we don't know when the new normal is actually going to settle. And I'm just really excited, actually, to be talking about opening stores again, as we did today in Texas.
Mark, how did you make that decision as to whether, even with changes and safety precautions taken, to reopen at all? What guided you as to whether that should be a decision you take and whether it's safe?
Look, we put it into a rubric, and it starts with obviously the government and the guidelines we're getting from them. Of course, safety is always a concern, and we have to make sure that's there, both our internal and our external customers. We have to be ready. You know, we're a luxury retailer. We weren't buying things like hand sanitizer and facial coverings back in the day. So we got to make sure we have those when we're ready to go. And then the community, and how do they feel, and are they ready? So it's kind of it's a mixed bag of thoughts, but they go in, and that's how we make our decisions.
I know you don't have many. I think you just started today, right? So did people come through the stores today?
Yes, they did. And, we saw some great energy. And, people were excited. We actually opened curbside a few days ago, and it was amazing the response we got. And it was amazing what people were buying. And it gave us a lot of, excitement about what's to come. And that's what we need right now. We need some excitement. We need some positivity going.
What were people buying? I know it's only one day so far, but did you expect there to be significant shifts in how you lay out the store in not just the immediate term, but the year ahead if consumers have been feeling the pinch of the economic downturn?
Look, I think we have to be, we have to do what we have to do. The customer's our boss. I mean, they're going to vote with their dollar, and we're going to have to ebb and flow. And that's why we call it the next normal, not the new normal. But right now, we were very happy with the response we saw around luxury. We've been obviously selling online, and that was a different, that was more focused on beauty and more casual. But as we opened up, it was fashion and it was luxury. So that's good, and it's promising.
Mark, as you know, the narrative around department stores in this country has gone from bad to worse as this pandemic has hit. How do you think about what your industry is going to look like after that, and how many will be left to survive?
Look, I would tell you it's been a problem for me for a while. I think there's too broad of a brush being painted over the department store industry. There's a lot of us that act differently and respond differently and do things differently. There are several players that came into this crisis candidly distressed, whether it was a flawed strategy or the balance sheet. What I'm focused on is Saks, and I believe, first, our strategy is right on. We were heading into the direction of personalization, ease, working with the customer in the whole ecosystem of Saks, all channel, Then from a balance sheet perspective, if you think about Saks as an operating business, we currently have zero debt. We have, when you think about it, we're owned by, and I like to say it like this, unlike my peers who are retailers that own some real estate, we're owned by Hudson's Bay Company, which is actually, in my opinion, a real estate company that owns some retail. They own about $8 billion in real estate, and I would peg the equity value somewhere around $5 billion just in the real estate portfolio alone. So I feel good between zero debt and just our ABL with that backstop behind us. Saks is positioned well coming in, and it's going to be positioned well coming out.
Well, some of them are not positioned like that. Neiman Marcus, one of your big rivals, is expected to file for bankruptcy. Your parent company, Hudson's Bay, is often mentioned as a potential buyer. I mean, could you see that kind of future where Neiman and Bergdorf and Saks Fifth Avenue are all under one company?
It's amazing. I think for 20 years, people have been saying that. There's so much scholarship around that concept. And sure, of course, but right now I have to tell you, Sarah, I am focused on our customers, our associates, and giving them the best experience we can and the safest experience we can.
Well, good luck with the reopening. Keep us posted. Marc Metrick, the CEO of Saks Fifth Avenue. Thank you.
Thank you so much.